Evening, peoples. Let's jump in here. As far as the funds I cover, which is a lot now, there was only trades. I'm going to do them all, but there were only trades in GDX and GDXY. So let's jump into that one. So what transpired today? Let me see if I can show you the sheet with the trades. All right, so we had, whoops, getting kind of stuck. There we go. On GDX, so we did a buy and a sell short down here on our 37 synthetic, buy a call, sell short a put, and then we sold an equal number of contracts out till the week of 8/2. Excuse me. Sorry if that audio was, I might have had my microphone too far away. So just to repeat, um, we did a buy call, sell short put on our 37 synthetic in GDX, and then we sold short equal quantity out to the week of 8/2, okay, to try and get a little more revenue at that same 38.5 that we had sold calls last week for this week. So here's what it looks like, peoples. So what happened? We only went up 6 points from 37.39 to 37.45, so up 0.16. And what did GDXY? Same percentage, right? 3 cents, because it's a much lower dollar amount. So here's the 375 contracts at 46 cents out to the week of 8/2. So guys, that's 9 trading days away. Now, metals, I said to you this week could be volatile. I wasn't expecting as much. The only thing that may trigger a run this week would be Newmont's earnings. Now, Newmont should blow their number out, but I think the analysts have been finally figuring that out going in the last week or two. I mean, shame on these guys. Um, they should have known what the average price was for Q2 for some time in gold. So, I mean, it's another $250 greater than it was the previous quarter, which is over 10% higher. So, Newmont's earnings should be up substantially this quarter. So let's see what kind of impact that has. There's so many other news and geopolitical and socioeconomic things going on in the world. So we may not get a lot of movement. Let's see. So what else happened? Well, 75,000 shares, in fact, did flow in today. So they used that capital. Now, I was able to verify. Remember, I mentioned that on Thursday going into Friday, Friday reported this, that there was a bump of 700,000 shares. Well, in fact, it was. And when you see a number that's like that much greater than all the shares owned, it was obvious to me that it was YMAX. And so I went and looked at YMAX holdings, and in fact, they bought a large number of, they bought their allotment in. And I mentioned that typically a fund comes out, gets established. In the case of GDXY, it was like 5 or 6 weeks before it paid. It came in, past the middle point of the month. So it wasn't going to pay its first month in June. So then in July, it paid. Well, now it'll be going on its second payment. So that's around the time prior to the second payment that they add a fund. The only funds that I hear they're not adding are any inverse funds. So like Crash is not getting added. And then Fiat, which is launched, the inverse of Coin. And then supposedly this week, I haven't checked the news lately, but when they rolled out Fiat, they were saying 2 weeks later they would roll out um, dips, the inverse of NVIDIA. So that may come this week again. They could have put a press release out. I've been super busy with a lot of things. So that's either coming this week or the following week, but I have a feeling it's this week. So in the comments, if you already saw it and they put out a release, a lot of times though, they don't put another release until it's actually launching. Sometimes they'll say on Tuesday it's launching on Wednesday, but I don't think they're actually allowed to put press out any more than like a day before it's launching. They can rumor mill or say something informally, but I don't think they can actually disclose, like, hey, in 3 weeks we're launching this fund. Okay, that's why they just leak it and then people talk about it. All right, so that catches us up there. So they got cash infusion. So we actually, though, had a net loss because let me show you. So here we gained the 17,250, right? But when we put on, and I'm okay with this. So when we put on this synthetic, that should have a 722. Bruce, didn't happen on Saturday. It happened on Monday. Okay. So what did we do? We sold these at 223 or sorry, we bought the calls at 223. Why? Because we're in the money. We're up at 37. What is the number? 37.45. So 45 cents of this is all about already being in the premium, right? And the opposite with the put. It's already up above, so you get less money. So I'm okay with that because we're positioned when we do move before 920, we start making money. If we get up to 42, 45 over the next 4 to 6 weeks, then we make a lot of money. So I'm okay with that part. It just doesn't give us a little cash flow along the way. Ignore these numbers. I didn't update them because I do it over here. It's just easier and I have my visuals here. I could link to this spot, but I'll do that at some point. Okay, so here we are. What's our synthetics, right? And a few guys just in your comments, in various videos, so I want to use this as a teaching or education. They'll say, I don't understand. You have minuses and plus, which one's which? What's a weekly? What's a synthetic? For right now, don't worry about debits and credits. Just understand I always pair the synthetics up and put them together. And my holding page shows them. And then I go down in a bar chart and you can graphically see it. So nobody is doing it at this level. And this is something I wanted to show you. Okay. I mean, I know you see it, but when you ask those questions, watch the video and the video will teach you how these things interact. Right now, the pluses and minuses don't mean a lot. But we do that for a couple of reasons because you want to know if you're ahead or behind in the synthetic. So you're buying the call and you're selling the put. You want the put to shrink down to nothing and you want the call to go up. So that's how we make money. So we use a positive number here to determine that. What's the difference between them? Well, to show that we sold it, but it's a liability. It's like I got a negative against me, but that negative may disappear because we just keep running above 37. As long as we stay above 37, this thing will just go down and down and down and down. All it is time premium, right? There's no intrinsic value. But on this call, it has that same time premium to 920, but where it gains its mojo, right? 45 cents of it because we're trading at 37.45. At least that's what it told me. Yeah, whoops, let me go over here. Yeah, we're trading at 37.45. So that synthetic, 45 cents of that is real money, is real value. If it went to expiration tomorrow, it'd be worth 45 cents, and this would be worth zero. All the rest of it is just what we call time premium, right? So 541,000, and we look at this right here. How are we doing? Well, this is that Wednesday of last week. when we ran up into the mid 38s and it looks like we were going to blow through 39 and 40. And then it calmed down and retraced on Thursday, went up a little on Friday. And this is just, a small amount, but sometimes it doesn't take a lot, right, on these funds. So this is the other key thing. This is a new one we put on today. We sold it at 46 cents. Well, it ended at 47.5. So I didn't want to roll this into this week. I want to use this stat for just how we're doing on capturing this. So right now, this is shrinking, right? We wrote a 38.5 and that's a dollar and 13 or sorry, $1.05 away. So Newmont is reporting on Wednesday, and that could change things. I expect them to blow out their earnings much higher than what the estimates were. Now, the analysts have finally started upgrading them and saying they're likely to have better numbers. So it could go either way, but Newmont is not GDX. They're just one of the largest miners in GDX. I think they may be the largest. Between them and Barrick, they go back and forth, but they're doing a little better. I think Barrick's got a little more geopolitical issues with some of it. They all do if they're big enough. So does Newmont, but I think Barrick's got more. In countries where sometimes the government, if they get a leftist leader or a real radical, he just comes out and said, well, I know those foreign companies are mining here, and I know the previous administration signed an agreement that we get 10% of the royalties, but you know what? We want it all. We'll just tell them to get out. And trust me, it happens sometimes, right? The rule of law is there for one administration, and all of a sudden the rule of law is gone. I think you guys can relate to that. Now, Americans used to be pretty naive that it existed in the world, and now I think we're starting to see that anybody in any administration can do these things that we thought only third world countries did. So we shall see, people. So that's what I got for you on this. 1887 is our fair value, or what we closed at 1884. I like this. I like seeing us have a positive. And now if we move in GDX, we're aligned. Now that doesn't mean we can't get capped, and we could run right by that. But I actually personally don't think it happens this week. I hope it does, but I don't think it happens this week. Okay, let's go look at payouts. That's all that's left. So I always put this in here now, and it's automatically computed from linking to the other page. Because I'm trying to say to you, hey, we've made 21 cents on our short call, and we added another 17,000. But we had another 30,000 added to our loss because we're buying the call lower and selling the put because we're already in the money. So right now, there's not much money to pay out, although there is money left over from the accumulation. We had about $1.40 and they paid us 80, right? So the other thing is they can easily roll and wipe this number out with this, and we have 20 something cents and borrow here. So I'm thinking that we get a 50 to 80 cent payout again this month. But again, we can win that ourselves by moving up. We just don't want to roar up in a single week. That's part of the problem, because no matter what we say, and I'm always educating people, look, these are income funds. They aren't designed to capture big moves up. I had somebody saying comments to me today, hey, why don't they, that was on a Misty, why don't they just go and write it out there 20%? Well, they're not really designed to do that. Okay. If they did it in a fund like this that has a 30 IV currently that is moving up, they would get 3 cents. You're not in these yield max, maximum yield. You're not in these funds to get a payout of 9 cents a month. People wouldn't even buy it. So in order to get these traditionally 40, 50, 60% yield, they got to write it fairly close. So what happens when you do that? Well, in a flat, a slightly up, and a down market, which covers a lot of the market percentage of movement, they're going to collect income and they're going to give you a great yield. So if you're bullish like I am at times, I just go out and buy the 2Xs. Okay. I know everybody isn't an active manager. And look, I'll call out the FUD managers when I see them do something stupid. And stupid to me means they've got 95% of the weekly captured and it's Thursday and it's a big sum. Buy it back. Don't risk that Friday some news is going to come out, an underlying is going to, report something and it's going to fly through and you're going to lose that 95% of your gain. If you want to get yield and you got 95% of it in the door in 4 days, take it off the table. Don't be greedy for 5% when you've already got 90. I call that stupidity, poor management. People laugh and say, oh, maybe that's a TGIF. They went out for drinks earlier or they're golfing. I mean, that's not happening, but I do think they're shorthanded. They're handling a bunch of funds. And look, it's not their money. When it comes right down to it, it's our money. They're just following a script. Okay. So if we want perfection, it isn't going to happen. But that's the bigger picture, guys. It's just the truth. As much as I want these funds to be way, way better, they're pretty darn good for capturing income. They're just not set up to handle these outsized moves. Outsized can be 5% in a fund like this. And Misty or Coney and the crypto oriented ones outsized probably 8. Even with those guys, they're only writing probably 5, 6, 7 is super aggressive. So when we get a 15% run up, we're not going to keep up. We're going to perform very poorly in that environment. So I know it frustrates me. It frustrates you guys. I'm educating you. So go buy a leverage, right? Sometimes these underlyings like MSTRs, $1,800. So it's hard. I mean, you still can buy, you take the money you were going to allocate and buy it at 1,800, but go get a little 2X fund that's $20 or something. Your dollars still have more leverage. So, that's what I do. Just like protection in the downside. You got to hedge at times on the downside when you have big gains and a lot to lose and the funds run way up. And you got to, when you see a bull run happening and you're complaining about the income's not sufficient, go take some action. I know not all of you are option players, not all of you understand or have the capability. But otherwise, if you're just a yield person, don't sit there and think. This is my other point that drives me crazy. I see it in some of these YouTubers. Oh, I'm getting this, and they're projecting out 20 years. Good luck with that, right? It may be under optimistic for the 20 years, but it may change in 3 months and be horrible. Nobody can predict out. If you don't think these are volatile times, just look at the world we're in, right? The geopolitical and socioeconomic upheaval that's coming. Things are going to be very volatile, extremely volatile over time. I mean, as I said to you before, I could see a 30% pullback in the markets, but I also could see another 30% melt up before we even get a pullback. So which one is it? The very volatile. So sitting there, getting a certain amount of income and reach that level and doing a spreadsheet to say this is over the next 20 years, I'm going to get X, Y, and Z. There's no way you can have any kind of accuracy with that. There's nothing wrong with grabbing what you can while it's good. That's what I'm doing, even though I'm fearful of declines and recessionary and all kinds of things. I'm still participating because I have the ability to stay active and watch it and have some protection in place, right? If you don't have any of that, then like I've said, good luck with just following some kid that's saying, hey, I'm getting this. I've been doing it for 6 weeks and I'm projecting out for the next 20 years. It's just not realistic. Nobody can project out that. Okay, guys, I'm done with my rant. All right. Have a great week, and we shall see. All right. Again, I'm not a financial advisor. This is not financial advice. Have a good one.